Hello, and welcome to another episode of Copper Bottomed, the show all about copper. Just by way of reminder, the name Copper Bottomed comes from the practice that the Royal Navy had of putting copper sheets on the bottom of their wooden ships in the Navy to protect them, and copper bottomed became a byword for something that was genuine and trustworthy and reliable. I have spent 30 years in the resources sector, a lot of it on the capital market side, about the other half of it on the industry side, looking at projects across a range of commodities and a range of geographies. And here in this Copper Bottomed show, what I'm just trying to do is provide a little snapshot on the market as it is today with some of the big themes and the news of the week. And then I go through a number of news releases which have companies that have put out news releases with noteworthy drill intersections in the week. I'm not doing a company report per se. I'm just looking at the news releases, just kind of digging down, reading it through, working through, and kind of trying to bring out the salient points. So that's by way of background. Let's get stuck in. Of course, the main story this week has been what's happening in Panama. First Quantum, of course, have got the Cobre Panama deposit, which is aiming to produce 350,000 tons per annum of copper, plus 150,000 ounces of gold, etc. It's a polymetallic deposit, but the principal output is copper, and they are on track for producing 350,000 tons this year. However, there have been mass protests in the street because a new Law 406 has been passed, which has given the mine concession another 20 years with an ability to extend it for a further 20 years beyond that, so up to 40 years. The people are upset about it. There are lots of protests. The share price of First Quantum has been hit very hard. It's been down, up and down, kind of between 20 and 30%. And the copper price has responded. Last week, the copper price was trading at $357 per pound, and it's now trading at $367 per pound. So it's had a kind of a kick. The population that is protesting in Panama is upset about climate change. It's upset about the environment. The mine is in an environmentally sensitive area. And there just seems to be general political frustration or general population level frustration with the government, which is using the Cobre Panama as a lightning rod for protest. What's interesting, if you look at the news release from Tuesday of this week, First Quantum responded saying that they'd noted the announcement by the president to have a popular consultation, a referendum on the 17th of December concerning Law 406. Now, the Law 406, as I understand it, that this is the law that provided the extension to the mine contract, but it also provided this minimum of $375 million per annum by the First Quantum subsidiary in Panama to the Panamanian government, even if copper prices fall. So this was a contract that the company and the government obviously felt was the right thing to do, and they passed it. The problem is that, as I understand it, that this law was debated for a very, very short time in public, in Parliament. It was presented, drafted, and completed within 3 days, and it smacks of an undemocratic process. And I think that's part of the reason why this is blown up in the government and in the company's face. If you look down here, the company is at pains to communicate that the Cobre Panama mine now contributes almost 5% of the GDP of the country and is 75% of the export goods, and has created at least 40,000 jobs directly and indirectly. And they talk about 8,000 employees directly. So it feels like a communication problem that has now become a political problem, that has now become an environmental problem. It's going to be complicated. It's going to take time. The president has said he was going to respect the results of the referendum on the 17th of December. So watch this space. It's likely that with the mine built, with the capital invested, and the country that needs the copper plus the global economy that needs the copper, that this copper will eventually come to market. Not that it's not coming to market at the moment, in the sense that the mine is up and it's running. It's very hard to see how that mine doesn't continue to produce, but the ownership and the economics around it, it's very complicated. This has now blown up to be a real problem. And what does this mean for the market? Well, 2 weeks ago, I was talking about the International Copper Study Group talking about a 460,000 tonne per annum surplus for 2024. And then last week, I was talking about how Teck and Anglo have downgraded their production for this year. And remember that the copper market is a 25 million tonne per annum market. So when you've got something like Cobre Panama, which might have a curtailment, it might have a period when it doesn't operate, that surplus of 460,000 tonnes predicted for next year could easily shrink, could come down to be a deficit. So it comes back to the view that there's an asymmetry in the copper price, because the cupboard is bare for the mega projects coming in the next 2, 5, 10, 15 years and beyond. Remember that it takes an awfully long time to build a copper project, a copper mine. I mean, the average is up now around 17 years. And the bigger it is, the longer it's going to take. Now, talking about big, let's go straight on to the weekly highlights. Now, these, I repeat, these are just a snapshot that are picked up by an algorithm that's run by Junior Mining Hub. They collate them into a weekly results summary, and these are the copper intercepts. And there are 4 here: Filo, W Gold, Lion Copper and Gold, and Meridian. Now, actually, I spoke about the W Gold result last week, and as I discussed, it's a scandium play, not a copper play. I mean, the copper grade in that is de minimis. So really, just this week, it's only 3 companies that I'm going to be talking about. But, well, my goodness, they're really interesting companies. Now, of course, Filo Corp is a market darling. I mean, Filia Boots, the Lundin name, the great discoveries, NGEX, Jose Maria, all of this, the kind of the Vicuña copper area now in northern Argentina on the border with Chile. It's turning into be one of the kind of the great new discovery zones, and it's really been driven by the Lundin group, with Filo Corp right up there. Now, interestingly, the market capitalization of this is $2.3 billion Canadian. They just raised $120 million at $21 per share, and we're now at $17.50 per share. And you can see here in the share price graph that it's been under pressure for a number of months now. This is a 5-year price chart. You can see the tremendous value growth, or the value creation through exploration. So if you look at the 52-week high and low for Filo, I mean, the 52-week high was $28, and the 52-week low is $15.80, I believe. So it's kind of trading within a range, a wide range, and out comes yet another stonking intersection. Here we go. October the 25th, Filo discovers a new high-grade zone at Bonita and reports 212 meters at 1.15 copper equivalent within 1,368.56. Now, regular viewers will know that I have an ongoing issue about copper equivalent. Here at Filo, they have already put out a resource, and so they are able to talk about copper equivalence. But I'll come on to this because there's a little nuance which is quite interesting. Let's have a look at what does this mean in terms of the geology. What does it mean in terms of what do these drill results mean for the project? So we're looking at we're looking at drill holes 91, drill hole 90, and 88. These are the highlights. I didn't go and look at what drill hole 89 was, but I think that I should go and do that. But basically what Jamie Beck is saying here is saying hole 91 intersects a new high-grade zone near Bonita, and it's the first instance of consistent grades greater than 1% copper equivalent outside of Aurora. Okay? This map, I know it's quite small, but in this area here, this is where the original resource is, and this is where Aurora is. So this is where the first resource has been delineated, and Bonita is this area here. And it says, at over 1 kilometer to the north of the Aurora zone, this opens up an entirely new area to explore for high grade. Yes, absolutely. So this is over here. Given that the closest holes to 91 are hole 60, 300 meters away, and 87, 550 meters to the south, there's lots of room to grow. Agreed. And then when you look at the outlook, they've still got 9 rigs active. The plan is to do 40,000 meters on the project in 2023. And they are absolutely focused on trying to make this one of the largest copper discoveries in recent years. I always thought that, with the discoveries and the huge drill holes, I always had in my mind that Filo del Sol was already a billion-ton resource. But because I was looking through this, I thought, well, actually, let me just go back and check the numbers. And I looked at the resource, and interestingly, the indicated tonnage is 430 million tons, and the inferred is 211. So it's not a huge resource at the moment. And if you look at the grades, it's 0.33% copper and 0.33 grams gold on the indicator, and a little bit lower on the inferred. So it's mostly driven by copper. A rough rule of thumb that I use is 1% copper is equivalent to about 0.7 grams per ton of gold. So that would show that this is kind of 3/5 driven by copper and 2/5 driven by gold in terms of the economics. And when you look at the resource, if you go and look at the slides and the cross sections, which they do well, as you would expect, it's a class outfit. The main resources in here, in this area, and the new discoveries are here and here, or these drill holes. So there is plenty of room to grow this resource. But at $2.3 billion, this is quite a hefty company. So it looks quite challenging to get your double here, to go from $17, which it is at the moment, $18 to $35. You need to find a lot more intercepts. You've got to pull out some stellar intercepts to really take this to be a $4 or $5 billion company. So it's hard yards from here. What else? Oh, there was another really interesting thing. In the resource, they assume metallurgical recoveries of 84% for copper, 70% for gold, and 77% for silver based on similar deposits. And the reason why you didn't done that assumption is because there's been no metallurgical test work on the sulfide mineralization to date. And then in the resource, they use 4 pounds copper. Remember, we are 10% below that, more or less, at 360-ish, $1,800 gold, and $23 per ounce silver. So quite high metal prices used in the resource, but not out of kilter by many, and those recoveries. Now, when it comes to this drill release and the copper equivalent figures here, it's interesting. They say the copper equivalent for the drill intersections is calculated based on $3 copper, well below where we are today, $1,500 per ounce gold, and $18 per ounce silver, with 80% metallurgical recoveries assumed for all metals. So what that means is that they're using a different way to calculate the copper equivalent that they did for the resource than they are using in this news release. I like the fact that they're using low metal prices, $3 a pound, $1,500 gold, and $18 per ounce silver. Those are conservative, and 80% metallurgical recoveries. It's a nice clean way of doing it. Just, I haven't got a problem with it. But note that it is different to the way that they calculate their resource. So what do I take away from this? Going through the news release, I was, as I said, slightly surprised by how early the resource was. That resource of 400 million tons, 430 million tons indicated, and 212 million tons inferred, that came just on the back of 62,000 meters of drilling, and they've got another 40,000 meters of drilling. So I expect the resource to grow, but given the market capitalization of $2.3 billion, it's almost as if the market is quite far ahead in terms of expecting big numbers. It's because there are cheaper ways to find 500 million tons of copper mineralization at 0.5%. There are other companies that are offering that. So, and I was also intrigued to see how open it is and how much more exploration they've got, and how that they barely started the metallurgical test work. And this feels really, really quite early stage. So do I like it? Yes, of course. It's the Lundin Group. It's Filo. It's a big deposit. It's a huge system. I went through the presentation and I looked at the way that you've got these kind of stacked and telescoped, and it's the phrase that they use, it's a dumping ground for metal. But when I actually went into the detail of it, it's like, oh, crikey. So there's a long way to go from here. It's going to take a long time and a lot of drilling and a lot of money to get kind of materially further down the line, and yet the market capitalization is indicating that we are already materially further down the line. So it was interesting, and I will come back and I'll look at this company again in the future, particularly if they continue to really hang together some of the high-grade stuff. From a mega exploration company to a minnow, the market capitalization of Lion Copper and Gold is $26 million. So a lot less. What's that? Kind of 1,000 times? Or no, so where we kind of, it was 100 times smaller than the market capitalization of Filo. Lion Copper and Gold, Canadian company, but they've got assets in the US. For me, it's quite unhelpful that they only report in Imperial. I understand why the North American market, in particular the US, likes to work in feet and inches and tons or short tons. But given that the rest of the industry globally is reporting on the metric system, I like to see it at least with the comparison, or they just both sets of data there. So Lion Copper and Gold, 9 cents. And if you look at the share price chart over the last 5 years, you can see that it's a illiquid junior that barely trades, very, very blocky, very, very liquidity, trade by appointment. So immediately you go into this thinking, okay, right, I really, really have to be confident about this. I've got to have either personal ties, or I've got to have something seriously compelling to come into here, because it's an unattractive share price chart just in terms of liquidity and volume. First thing I find quite interesting is they talk about the 2023 exploration program funded by Newton, and Newton, the Rio Tinto's venture. They're just focused on unlocking metal by clever hydrometallurgical innovation. So this is immediately, for me, this is either a low-grade play or a refractory play. There's some challenge on the chemistry, the mineral chemistry, that is getting Newton excited. And then 5 targets were drilled. Okay, fine. Most compelling results produced at the Bear deposit, and which means that the other 4 were not that compelling. And indeed, if you go and look at them, they're not that compelling. But the Bear deposit, this is the crucial thing, is concealed beneath a thick fault slice of younger tertiary ignimbrites and alluvial cover. Ignimbrites are kind of welded hot volcanic deposits, which can be very hard. Now, curiously, as soon as I read concealed beneath a thick fault slice, I think, oh, this is going to be deep. I wonder how this is going to work. And when you look at the drilling highlights, which are presented on the first page of the news release, there's no mention of whether how deep they're from. They say diamond core drill hole 53A hit 926 feet, whatever that is in meters, including 223 feet, whatever that is in meters, but they don't tell you where it's from, how deep it is. And so then you go to the table at the back and you find out, it starts at 467 meters below surface. And then I do the next thing on the next one. Okay, that one starts at 704 meters. Now, what's curious here is that they report the copper results in total copper content, TCU. That immediately makes me think that there's an acid-soluble component here, i.e. this is typically, you normally report oxide copper deposits in total copper and the soluble copper content. So I started looking around for that. And then right at the back, in the notes to the company, in the background to the deposit, etc., I found no oxide mineralization or supergene enrichment has thus far been identified at the Bear deposit. Okay, the zones of primary sulfide mineralization remain open in several directions where the limits of mineralization are not closed off by drilling. Fine, okay, so it's open, but it's not oxide, which is strange because they're presenting a total copper figure here. I think it'd be clearer if they just said 0.31% total copper. Sorry, just 0.31% copper. And here, 0.5% copper, 0.4% copper. The T suggests that there's oxides around, and there aren't. Okay, just going on a bit, these deep angled drill holes were located along a northwest projection of elevated copper grades and a coincident mag low and strong induced IP anomaly. Okay, so again, that word deep, we've got the thick full slice, we've got the deep angle drill hole, so we know that this is going to be deep. And then they dodge putting in the from here, but we've picked it up. And they're drilling a projection of elevated copper grades. I mean, elevated, And then they talk about Travis Norgal, the CEO. He says, these exceptional results can unlock substantial new zones of high-grade copper mineralization. Well, for me, a few hundred meters at 0.31% isn't particularly high-grade. I think I did do let's say, 80 meters of 0.4% copper down at whatever that is, 700, 800 meters. I'm not sure that that's going to drive economics of a block cave or an underground deposit. You're going to need to find a lot of that stuff. So it's interesting, I guess. You could go on to say that the high sulfide mineralization percentages in B53A and 54 may be indicative of a high pyrite shell and proximity of a high-grade copper mineralized core. So quite often in a copper porphyry, you'll get a central zone of copper mineralization, and then you'll get a pyrite halo or shell around the edges. And that's the classic Lowell-Gilbert model with the pyrite ring around it. Now, if they are in the pyrite ring, they may, as they say, be able to vector into a high-grade core, but I didn't see much discussion on vectoring here. There's lots more work to do. So what I'd like to see from this company is three things. One, include the from depth in all of your drill holes, because we need to know how deep the mineralization starts. Two, drop the T for the total copper. Just report it in copper, because if there are no oxides around here, that's just misleading. Not in a bad way, but just it's unnecessarily complicated. Three, I'd like to see figures in meters as well, in metric. And I didn't say the fourth, but the fourth will be an interpretation, a better plan to vector in on the high-grade mineralization, because it might be there somewhere, but it ain't there yet. So interesting, but quite a way to go. And then we come on to the next company, Meridian Mining. Now, disclaimer, I do have a very, very small position in this company. I've got a few shares, but I hope that doesn't make me biased on the reporting here. So I bought, when did I buy? In fact, I've owned this twice, actually. I bought it once a few years ago when it was around 35 pence, and I rode it up and sold on the way up to $1 and eventually hit $1.20 and a bit. So I was a very happy owner and an exiter there. And then I didn't hold it for a really long time until the PEA came out and showed some very robust figures, very quick payback. And I thought, I quite like that. And I bought in, and the share price is down 30, 40, maybe 50% in the last few months since I bought it. But that aside, I'm just going to try and be as unbiased as I can and go through this news release. Right. So what do? Meridian reports gold and base metal assays of up to 6.7% copper equivalent at Santa Helena. Okay, you know my beef about copper equivalents. The TSX guidelines are crystal clear. You cannot use them for reporting exploration results, and you can only use copper equivalent when you have an existing resource and when you, as a minimum, you talk about the metal price, the recovery factors, and any other factors that might affect the value content. So, of course, Meridian does have a resource, but that's for Cabasal, which is further up the trend. It doesn't have a resource for Santa Helena, even though there was a historic mine here. It was a zinc mine, and so they're mining for zinc. And if you look at these intersections, 6.8 meters at 4.9% copper equivalent, of which 1.2% is copper, fine. 1.4 grams gold, that's also good. So remember the gold is, my rule of thumb is just at the moment in terms of where prices are, it's about 75% of the 1.4 can be kind of considered as a copper equivalent, just as a thumbs up. But here we go, you got a big kicker from zinc. Now we know, everybody knows, including Gilbert Clark, the CEO of Meridian, that your payable on zinc is going to be low. You're probably going to get, from the smelter, you're going to get kind of 70 or 80%, maybe 78%, maybe 82%, but let's call it 80%. So you've got to take the recovery on the zinc plus the payables to get your kind of relevant. So this is likely to pull the copper equivalent grade lower than is being reported. We won't know until we're further down the track, but just bear it in mind. Same again, and particularly for these two, the copper with the zinc percentage up here at 10.5 and 10.9%, it's going to skew the numbers by not including the payable. It's fine. I'm just noting it. The thing that I like about Santa Helena is that it's shallow. So if you look at this is a long section. You can see this is kind of the main mineralized horizon. That's fine. It's all good. The other thing about Santa Helena is that it's now over 3.1 kilometers long, or about 3 kilometers long, and it's this section here plus another kind of 2 kilometers long here. So there's lots more work to be done. It's quite a positive result, even though the numbers aren't as splashy. These are shallow, the stripping ratio will be low, and remember that it's quite close to Cabasal. So what does Mr. Clark, Gilbert, who I speak to occasionally, he's been on Crux, I've interviewed him. We talk about other things in the sector occasionally. 3.1 kilometers is open along strike and down plunge. He describes it as being Santa Helena is evolving to be a second potential open pittable resource target within the Cabasal belt, and it is only a short trucking distance to the Cabasal mine. So this is the building on the thesis that VMS deposits come in clusters, and that this is a pod of resource or pod of mineralization that could come into a resource with a bit more drill definition, and then it can be mill feed for an operation at Cabasal. So it kind of underpins the growth thesis around the development value block. At Cabasal, you've now got the growth thesis coming through other targets along the belt. So it's all fine. I would rather not see the copper equivalent in the headline. I mean, if you look at it here, at the bottom, when they're talking about the notes to the copper equivalent, they say Santa Helena is based on metallurgical recoveries from the historical resource, which was a zinc mine. Yeah, that historical resource, the historical extraction was 89% of the copper, and what have we got here? 89% of the copper and the zinc, which is I guess a good thing, because they're recovering both. It means that if you're focusing on the copper in the future, you'll probably get as much copper as you did in the last, and you'll probably get as much zinc. So that's fine. I'm happy with that. What else can I say about Meridian? No, what do I want to see from the company? I would like to see that split, the headline, and also an acknowledgement that the resource at Cabasal doesn't mean that there's a resource yet at Santa Elena. They're quite separate things. But other than that, since this news release came out on the, where are we, on the 23rd of October, Bruce McLeod, who is the chairman of Sabina Gold that got bought out for $1.2 billion recently, he has joined as the chairman of Meridian, which is good. So I would like to see more marketing done. I would like to see Meridian come on and to Crux Investor and talk to me a bit more about the project. I would like to see ongoing drilling and ongoing. Just keep up the good work. Really, as I said, I'm a shareholder. I'm down a bit at the moment, but onwards and upwards. And there we go. So I think that's it for the week. Look forward to seeing you next week. Thank you very much.